We laid out a vision Monday morning. We talk about how we're developing energy assets, thermal, electric, a lot of great technologies. And I'll say what's wrong with the industry, right, and why things haven't moved even quicker isn't for the lack of technology, it's for the lack of integrators. So we've been integrating a better approach of how to go to customers and existing and new build. So that's what we were announcing this week is we announced a consortium of other engineering firms. We're developing energy projects and ultimately to own and finance these projects as well. So in that context, we've had an interesting week of announcing another partnership with, so we have this consortium with SMS Engineering, Sustainable Tech, so 2 engineering firms who can help us design these types of systems. We also announced a great partnership with a group called Empowered. They're out of the Kitchener-Waterloo area, and amazing technology. So they're using artificial intelligence. So think of it this way. We have buildings, you can optimize it, run it efficiently, have all renewable energy, right? And as much as you want, as much as you can. But if you're connected to the electric grid and there are certain demand days, certain peak days that cause, a lot of peak use in the province, in Ontario as an example, or even Alberta, then if you have a same coincidental peak of your building versus the province's building, you get dinged a much greater portion of the electricity charges for the following year. So partnering with Empowered was about using their AI that can tell you which 2 hours to curtail your energy to avoid those charges. That was announced yesterday. And then today, this is what we're gearing up for. We've told people we're going to be growing and acquiring and building out the business. Today, we announced that we signed an LOI, a letter of intent, with a Canadian organization that has already secured a number of really cool battery, renewable energy technology rights to Canada, and particularly around the PACE program, and I'll get into that in a few minutes. So this person has a certain pipeline of leads and prospects we're going to now nurture, in addition to all these rights exclusively in Canada for very particular purposes. And we're looking to acquire those assets in the coming weeks and months.
Wow.
It's been a busy week.
Yeah, it seems like every week with you guys is busy lately. And we're really in the dead of summer right now. We're right in the heart of summer.
Yes.
And it's probably the hardest time for the stock market, let's be honest, for all companies, from the Apples all the way to the UPIs. It's, summertime, people are on vacation, people are spending time with their kids. But the thing I love about what you guys are doing is that it's business as usual for you guys. I mean, you don't care. You don't care that it's the middle of summer. You guys are.
I care. I've been really busy of late. I haven't had a lot of personal time, so I care from that. But we're putting out a lot of stuff, and it's all. I hope people can appreciate your viewers can appreciate. It's all connected. It's connected to what our strategy is, what the plan is. I'm trying my best to make sure that energy resources are bundled into a cohesive group, and you can start to get why we're putting out the announcements we're putting out. But it's a slow time, and it's a great time to get information out for people who are paying attention. But certainly, there's fewer people paying attention than pre-summer.
Oh yeah, and you know what? It's the same thing I always tell clients is it's probably the best time to do videos because there isn't as much competition. There just isn't. So when you're out there and you're telling your story, there may not be as many people watching, but you also don't have as much competition. So when you're telling your story, there is going to be less people telling their story. So you may get some new investors. You have no idea who's watching.
Rich, we're definitely getting new investors, right? So that was part of our objective at the start of this summer and at the start of this program was we need to bring in thousands of new eyeballs, thousands of new investors into the company. So we've definitely done that.
Good.
And then obviously there's other things we need to work on, which I think your viewers will be looking for is what else we can do to do other things. And we're just going to keep putting our best foot forward. And we'll see how that plays out in the coming weeks and months.
And I've got some questions for you. I know the audience has some questions for you. So one of the things when I read this press release that caught my attention, where was it? There's a point here that it really caught my attention was that PACE is
beautiful
doing,
program.
As of 2019, over 200,000 U.S. homeowners have made $5 billion USD in energy efficiency and other improvements to their homes.
Yeah.
So there's no explanation of how much revenue this deal is going to bring with it. Can you give us kind of outline on what you're thinking, or
Yeah, so I mean, I'll give you a sense of the PACE program, and then I'll work it back down. So the PACE program, obviously globally, everyone's trying to install and to become more low carbon or even net zero from a carbon perspective. And there's a cost, there's a capital cost, there's a certain payback attached to a lot of those technologies, and it's not so easy. It's not so easy for every homeowner, a business owner, to just sort of pull solutions and say, let's install them all. It's a bit of, it's a lot of effort to convince them why they need to embark on a bunch of retrofits and things like that. So the PACE program, which is brilliant, it's this property assessed clean energy program, which basically allows let's take a homeowner. It allows a homeowner to say, I have about $20,000 worth of upgrades, maybe a heat pump, batteries, maybe some solar panels. I have, say, $20,000, $30,000 worth of equipment I would love to install in my house to allow my house and my energy use to really come down, take less dirty energy from the grid, and become cleaner from an energy perspective. They might not have the capital room, right, from a debt perspective. Maybe they're maxed out. Maybe they already have a mortgage and a second mortgage. I mean, there's a bunch of reasons why they might not do them all at once, or they might not even do them at all. So what I'm looking at is, and what the market did was said, well, how do we enable more people to buy these products? And so you create a much bigger pie of all the sales going on for batteries, solar power, and things. And so this PACE program is brilliant because it allows a customer to say, I want those $30,000 worth of items. I want to buy them today, but I can't pay for them today. So what it allows them to do is stick it literally on the actual responsibility of the house, right? So it's now attached to the house. It goes into the property tax roll. And so from a municipal perspective, when they're collecting the property tax, so you might have a 20-year contract to pay that off. When your city is collecting your property tax, they are commingling whatever is an outstanding payment over the 20 years you're paying towards those assets you're paying off. And it could be, let's say, a 10, 15-year payback, but you have 20 years to pay it. Whatever payment you owe might be $100 a month. It is commingled with what you owe in property tax. They do not distinguish between the two. So if you have an outstanding bill and you didn't pay off your entire amount of that bill, even the property tax, or even what you owe for renting or paying off that capital item, they don't differentiate at the city. So if you're defaulting on your property tax. They have absolute powers to take eventually your house if they need to. So that you know you're going to get your money, it's attached to the value of the house, and the city is going to guarantee that they're getting your money because that's what they do. So then if you're looking at funding those opportunities, much greater, less risk, greater ability to collect it. It then reduces the cost of that debt in order to finance those opportunities. So quite simply what that is, it's going to enlarge the market opportunity for all these types of assets to be sold and installed and serviced. We're going to be motivated by that. And then, so the second part of that is the company we're dealing with and their assets and their rights. There's a lot of moving parts to it where the more that we're able to refine in this process, the output of, if you do this pilot, this is what you get from a back end revenue and order perspective. We're in the process of, we'll refine that so that when we do come back to the definitive agreement, it's a very clear, at least a clear package and range of this is now what we're going to achieve for doing this deal. And then, of course, it's going to be, how do we take this PACE program and scale it across the country for our own products and services? So, I don't need to reinvent. I just need to find a way to grab on, to attach to the wheel and get our fair share of it. And we're doing that. Wow,
that's incredible. It seems like you guys are getting your hands involved in so many different areas.
Yeah.
And I love watching you guys evolve. And
yeah.
I've been doing a lot of thinking over the last 2 years, and I've been thinking about all the companies that have come from your level, 25, 30 cents to the senior exchange. So we've brought Mind Medicine, we've brought Vicinity Motor Corp, we've brought Standard Lithium, and soon TAT is going to be the next one that will be on the NASDAQ. And these are all early stage companies that we brought first. We interviewed, we talked about them when they were early stage companies. And I started thinking, what's the next company that reminds me of these guys that have come from like a quarter to $2, $3, $4, $5 and now on a senior exchange? And UPI keeps coming up in my mind. I keep looking at you guys and thinking you guys could be next. And it's
well,
because
Rich, I mean, I can absolutely say this compared to our peers who are absolutely undervalued, but it says nothing about what we've got in fundamentals. So that's why I'm always excited every day. We've got a lot of room to prove to shareholders why we're really good value for money. And I can say that because against our peers versus our peers, we're very well undervalued compared to them. So there's a lot of room to grow for that perspective. But, you know, unlike, and I think we've had this conversation, unlike other companies, not that there's a lot of them out there, I'm not going to say that, but we are building a foundation that it's going to allow and enable significant growth and significant, you know, just multiples of what we need to do. And if you think about it, you know, some people might say, you know, so a few things I'd say. One, some people might say, you know, they seem to be doing a little bit of a lot of things. Is that really a good strategy? And I would say, for where we need to get to, you can't just walk there. You need to walk and chew and make sure you get your you know, jump onto the different market opportunities, get your piece in there, and then you start growing each one, some organically, some tuck unders. You need to build the foundation you need to build. You can't go build up a house, a number of stories, if you don't have a good foundation. So, and I need to do that fast, and we've been doing that fast. Second thing is, you know, I was here originally in this company and I came back, but for 20 years, over 20 years, I've worked on a number of leading projects and solutions and services that I'm taking that experience, that knowledge, those relationships outside of what we've done as an HVAC services and building controls company. And I'm bringing it in-house, and I'm bringing those resources, that knowledge, the contacts to scale our business. So it's hard to look at the business and say, you know, can these HVAC guys really do these things? I've done these things, and that's why we're now going to be able to execute it even better. So we're taking on a lot, but I don't think shareholders would expect anything less.
Yeah, I'm really impressed. And I look at Berkshire Hathaway and I look at Warren Buffett's business, and they're involved in lots of things. And they've got all kinds of businesses that they've been acquiring, and they're trading at $400,000 a share. Right. And they had to start somewhere. And obviously, I'm not necessarily comparing you to Berkshire Hathaway, but I like the idea of acquiring your growth, maintaining a very strong balance sheet. You guys have no debt. As long as you maintain that and you can continue to maintain a strong balance sheet and you continue to acquire your growth, you will not only continue to be undervalued, but at some point, the value and the market makers within this market are going to say, yeah, they're undervalued, and we're going to see the price appreciate. Now, I have a question. I have some questions for you.
Yeah, please shoot.
And then I got some questions from the audience. So first and foremost, with today's press release, you put out a vision, unleashing the value from energy, and announced a consortium agreement to develop energy assets. What is that, and how is that going to help UPI?
So we are trying to do a number of things for the second half of this year and beyond. And one of them is from an energy resource perspective. I think that's where we'll get the greatest lift on this. We're trying to build a platform of owning and financing assets. So those can be anything from building control assets to heat pumps, to boilers, chillers, to, you know, entire systems of thermal electricity, microgrids on a site. And so this consortium, if you think of it, if someone's building a new, say, a condominium, you know, if there's different stages of when that developer, that builder is hiring key vendors and suppliers. The higher up we can get on that chain, the better value for us and opportunity. So if we're not involved in the actual conceptual design of the energy system for the building, what's going to deliver the thermal energy, the electric energy on site, then you miss the opportunity later on as you triage it to get the right piece of work you want. So getting in earlier with the right design, so building out those design capabilities to design really cost-effective energy systems and working with the building owners or the developers, that's a critical piece in this equation. If you're not at that level, then you're just playing catch up and you're waiting for POs, purchase orders to come down and get your piece. We need to get involved early. And so we're doing that. We're having conversations with municipalities already. We're having conversations with apartment condo developers and talking about how we can bring the right solution set of technologies, of design. And as we start filling in those pieces, we have the opportunity to bring the financing, the ownership of the assets, maybe a long-term utility contract, and then we can start getting our piece downstream as well. So it's really getting in early enough to almost buy our work out of it, in addition to buy our position to secure what we need to secure later. So that's the real reason around that is it's protecting our turf, creating a lot of greater value in what we're designing and then supplying and equipment and installation and servicing. But it's also going to lend itself well to, I'm trying to build an alternate asset class platform. I'm trying to build something that will have millions and hopefully hundreds of millions of dollars in assets under management, whether they're financed assets that get transferred out 10, 20 years from now, or whether we own them in the long run. That will help our business go from X multiples to, say, 20 multiples. I mean, and it's that transformation of this business. So that's really what that announcement was about. And the consortium partners, and I've known them for a number of years, are great designers of engineering, engineering designers of systems that not everyone out there, even big engineering firms, are good at designing these alternative energy systems. You got to be really careful of your approach. And we're very cautious and aware of what it is we're trying to build here.
I love it when I hear companies are building alternate asset classes, because I talked about Berkshire Hathaway, we could talk about Google, we could talk about Apple, we could talk about Amazon. We just had Jeff Bezos fly to outer space yesterday. So they're used to sell books. Amazon used to sell books, right? Now they're going to outer space. So if the biggest companies in the world can be building alternate asset classes, why can't the smaller companies? This is how you build a big company. This is how you have growth.
There are a number of great examples that certainly have come out of Ontario who've done that. And one of them I always pick on because I knew them well is Enercare. And Enercare was publicly traded. It built up a number of assets, rented out hot water tanks and various assets to customers. I mean, they were making 20% unlevered in interest just for renting them out, in addition to servicing them. So you got the installation revenue, you got the servicing revenue. And what happened with them when people finally figured out what that opportunity is, Brookfield bought them for over 20 times earnings. So there is something happening in the marketplace. And, I will definitely make sure we're on the leading edge of that. We're always going to be the leaders driving. Might get my head against a wall a few times in trying to achieve that, but you need to be at the front end. If you want to get premium value, that's what you need to be. You want to just get, low risk and no reward for your effort, then you wait and you stay as a laggard. We're not laggards here.
Beautiful. Now, you did touch base on building an alternate asset class platform. Can you explain to the viewers the benefit of that?
Well, I'll add to that question as well. Where's the opportunity, right? So if we look at, say, a hotel owner in somewhere, let's say a hotel owner in Ontario, you think of how they get all their energy, their electric energy and their thermal, right? From, let's say, natural gas. All that energy is coming from commodities. You're paying so many dollars or so many cents for your kilowatt hour of electricity, and you're paying so much for your gigajoule or your megajoule of natural gas coming in. So as you need energy, you're paying for every ounce of it. You're paying for it as a commodity cost. And so that system, which I know very well, I've done a lot of work in the sector, that system is quite bloated. It's bloated from the perspective of the all-in costs that other people, other utilities and other organizations secure themselves for developing those models. They're high, and they're getting higher, and they're getting more expensive. And so what they've created is this amazing opportunity that if I can go develop an energy system and supply of thermal from geo-exchange or solar panels, if I can develop solutions on site, pardon my language, I can start raping and pillaging the loads away from those utilities and those sources, and I can do it on site for far more cost effectively than what the current alternative is. So the current standard is really expensive for what we can do on site. And it's the integration of all these technologies that makes that really lucrative. So then the second part is, we know it's not like I have to go make a market that does it. We know that the opportunity exists. Now it's about building up those contracts where now I'm going to own assets in those buildings. I will own certain energy assets delivering thermal energy. Maybe I charge a capacity charge or a consumption charge, but I'm going to own those assets in the long run and get my pound of flesh for what I've put up in capital and then some in return. So we're making money on the financing of those opportunities, whether the finance or we own. We're making money on the equipment, on the installation, on the engineering, on the servicing. It's a great model. And that's why we're interested in this alternate asset class. And if all of you, all your viewers can look at this and think, how many of you have a piece of equipment that you don't own in your house that you're just renting?
Yeah.
Sense of what that opportunity is. More and more building owners and homeowners start to realize my core competency isn't to worry about my lighting system or to worry about how efficient my energy system is. I think this just becomes another component for people to own externally, to outsource, and to then maintain it and deliver value for money.
Beautiful. You just announced a partnership deal with Empowered, another AI solution for PropTech. Walk us through what they do and why it matters to shareholders.
Yeah. So again, certain markets are different. Alberta has a bit of this. Ontario has a lot of this, where the province, right? So the way that they procure energy or electricity, they have all these contracts that they hand out for all this power they get from renewables, and in some cases, well, a lot of hydroelectric, in some cases, cogeneration or natural gas fired plants. When it all adds up every day, so every as you get towards throughout the day in peak periods, they start turning on additional systems in the province that they pay for that power. So what happens is you have so much money that the province is paying for that power, right, at a certain price in total, and you divvy it up to all the local utilities, to all the end customers, and all of a sudden you find at the end of any given day, at the end of any given hour, the reality is there's a big difference in what the province spent on power versus what they billed out on power. And so there's a gap of billions of dollars. And in Ontario, they call it the global adjustment. And they say, there's this gap of billions of dollars. Who do we give it to? How do we hand that out? And what they've said, and it's a very arbitrary, made-up model, but it is the way that people have to play it. So in Ontario, what they've said is, okay, those large industrial and commercial users, based on how much energy use you have throughout the year, you're going to get a portion of this. And the way that we determine what portion you get of it is from April, so May 1st to the end of April the following year, whatever top 5 peak days of electricity use in the province, whatever peak periods, whatever peak periods 5 in that year, if your electricity use in your business matches that, so if you have a coincidental peak of electricity use the same time we have those top 5 days, right, we're going to give you a larger share of whatever is left in the global adjustment than people who didn't have use during those 5 peak days. And so there's a whole industry set up of companies like Empowered who are monitoring temperature, monitoring when those likely peak days are going to be. And think about it. You can't just arbitrarily in advance of a year say, oh, we think it's going to be these 5 days. You might have to pick 10 to 20 days you anticipate could end up being part of those 5 days. And you send signals and messages to your customers to say, curtail your energy for those 4 or 5 or 6 hours, or you're going to get dinged. And what we're talking about, if you don't curtail and you're a large industrial user in this province and you don't curtail on those days, you happen to match the same peaking, it can be, a handful of percent of electricity use for the year during those periods could amount to over 90% of your electricity bill for the following year. So it's a significant portion that can come your way. So what does Empowered do? Empowered uses AI to better predict and give signals to our clients and ourselves. Here's a 2-hour window, go curtail. So they're better than other people out there who are just giving, here's a 6-hour window, we think you could curtail today. One, they're very good at saying, here's a 2-hour window. So it's least intrusive to my business. Second thing that happens on this is, so we're a partner with them. We get a percentage of the savings as they get in that relationship with that customer for saving them money. So that's how that would work. But the second part is, when you give that signal to any business in this province or Alberta, anywhere that says, go curtail your energy, what do they do with it? Most businesses say, oh, am I sending a shift home? Am I turning things off? We have the capabilities and the building controls and the ability to automate things, to have another layer of supervision that says, oh, we just got a signal and we turn it off. And now we shift things down for 2 hours and we bypass that curtailment period. So the point is, it's a good partnership. It's going to allow us to really maximize the revenue, saving opportunity for customers, but really for ourselves, generate revenue, for our customers, really show value. You can be as efficient as you want to be every single day. If you miss those days, right? Or your coincidental peak with them, you're doomed. So we're going to help you mitigate that.
That's great. Now, UPI indicated that you were looking for acquisitions this year, and 2 weeks later, here you are announcing an LOI to acquire a microgrid service company, which we talked about earlier.
Yeah.
What are you looking to acquire, and where does this fit in the plan for growth?
So this fits into the energy resources. So think of it, the energy resources side is the one area, and why we kept it to the latter half of figuring out technologies. We don't have a lot of internal skill sets from doing a lot of the energy resources, putting in solar panels. We don't have a lot of the resources in-house to do a lot of that. So as we go and build out those partnerships and build out the ability to, that's why we partner with engineering firms, as an example, to generate those deals, we now need to start landing on what's a reasonable platform to bring in the door to be our start platform for that energy resources side. So there's a reason for the timing of it. Having a new, a business unit or a business that sits underneath Universal PropTech that has the skill sets, has the pipeline, has the assets, that becomes a bit of a hub and spoke model to then start building the rest of the energy resources around that platform. So the timing of it made a lot of sense. We've known about this opportunity for a while, been nurturing it. So we think the timing's great to really get this consummated the next few weeks or month or so.
So for the viewers, when does this result in deals? How quickly will these recent announcements allow you to close deals?
It is a great question. And what we're doing, similar to what we did, and I think this is what I need people to look at, similar to what we did in January and February, where we started bringing in a number of technologies. About a quarter or so later, you started to see, oh, there's some announcements, there's some deals. So I just, to manage expectations, we've brought a lot of these in. There are targets and things we're working on with all of them. But now, I look at August and it's turning our sights to how do we integrate? How do we put together the right marketing packages, sales packages, and get this out the door and start getting a lot of great contracts attached to them. So, our year end is the end of August. I do not see these spitting out immediately into this fiscal year, obviously, but it's setting the great foundation for this upcoming, Q1, Q2 of the next fiscal year. So I'm excited. So there'll be a bit of a lag effect, but some of the projects, a good example, energy resources, some of the projects we look at, we could land a relationship with, say, a municipality. We can do a number of, it would be, assessments, options analysis of what technologies to use for that new, 60-acre site, let's say. So there would be announcements along the way of we've secured a relationship to accomplish X, right? And engineering are some dollars in there. And then it becomes, oh, we've now secured a utility model. And then what comes with that? There's additional design, there's actual equipment sales, there's revenue on construction. So some of those projects can take years, but you'll start to see remnants of everything we're talking about within the next 1 to 2 quarters for sure.
That actually leads into some of the questions from the community. This is from Brody, one of our club members. Can we get a timeline update? I know you touched on some of this stuff, so you don't have to reiterate too much, but just maybe kind of consolidate.
I'll be quick.
Can we get a timeline update on the release of the Q3 financials? And can we expect to see some revenue growth this quarter as a result of the various developments which you just touched base on in the last couple of months?
So end of next week, you will see that by end of next week. I haven't seen the latest draft, but so I can't comment on what's in there, but I haven't seen the latest draft. So we've had a good quarter. We had a good quarter of making some investments. So now we're going to see how some of that materializes. And we've been public about our backlog of really the sales that have come in. So now it's about chewing that through and getting that converted over into revenue. But we made some good investments over the Q3.
Great, very good. So we can expect to see revenues sometime next week then.
Yep.
Perfect. So that's, we're about a week away there, guys. That's good news. This is from Riley, another member of our trading club. With kids going back to school in September, can we expect more school board contracts in the pipeline? Great question, Riley. Yeah,
great question. I would say, yes, for sure, we'll see more. I would say, and I've commented on this before, a lot of school boards haven't really aligned themselves to what their strategy is yet. So think of it as no one's, it's not like, would have been logical. Summertime, they've all picked their procurements and they're now all rolling everything out. that hasn't happened. In fact, I think even today I've seen in the news, one of the political parties in Ontario is really pushing the province here, the government, to spend money on upgrading HVAC systems and equipment, air purification in schools. So a lot of those procurements haven't percolated through yet. I think they're still going to, so that there's always a great opportunity for us to get our fair share of that. We're certainly not missing our share of that. We're waiting for a lot of those procurements to keep rolling out. And another perspective too is people aren't in a lot of these buildings at the moment. So I think the dust hasn't settled as to what is it that they're all going to need to do going forward beyond, I think repair jobs were done, but as to new capital, I think they have to make a lot of strategic decisions. Are they going to install equipment that will be there for, like air purification equipment? Is it indoor air quality monitoring? They're still playing that out, and we hope to be pretty critical in a lot of those decisions as well. So I think you'll see more of that in Q1, Q2. We should see a lot more procurements coming out and hopefully being awarded, and we'll get our share of that.
Fantastic. This is another question from one of our top members in our trading club. Huge outdoor adventures. Go and subscribe to his YouTube as well. In Frank's opinion, what does the market need to see from them to move the stock price up?
A lot of people ask this question, and I'm always trying to find the most politically correct way to say it. It's in my opinion, it's not for lack of, we're certainly still undervalued. In my opinion, we announced a program. A program is a great opportunity. We brought in a lot of new shareholders, a lot of new investors, a lot of new people watching this stock. And I think clearly in hindsight, it was an opportunity for maybe other investors who are content with what they've done to date to go redeploy their money elsewhere. I don't think it was a slight in any way on what we've done, as opposed to it's just a time for them to take their profits and run. So that wasn't the intended design of everything. But at the end of the day, and your viewers get this, there were layers of stock. We know that there was a number that was chewed through, that was really early shareholders that were sort of chewed through. And I think just another layer that's being chewed through at the moment. But at the end of the day, we're really excited with the story and the narrative. I can tell you from all the information we've had of people looking at our program and everything that they've seen, we're well above average of the attention it's garnering of our US numbers are way up from overall volume. So that's been really exciting, and it's just things to build on. We're not done. So this, we needed more eyeballs, and I said this on your show last time, we needed more eyeballs on this. Now we have that, and we have more stakeholders, more shareholders for sure. And now let's continue to feed the beast. Let's continue to feed the information. So what it's going to take is there's a certain investor or a certain shareholder I think I'd love to see, and it's people who appreciate what we're building and who realize we're at the early stage of building that foundation. And maybe the other part of the answer, I would just say, yeah, there's probably enough people out there who look at this and think, oh, it was about Spotlight 19. And we're not a one-trick pony. And while I think that's still a great investment, and we cannot wait for when they give us their update, which, I'm Chris, my CEO, and I all the time, we know how great it is. We know how great it's working. It's just we can't say details until they do. So I think there's a segment of investors, probably original investors, who looked at that and said, is that, we're waiting for that. So, to each their own, but I'm quite comfortable with some of the outcomes of what we've done in this program. And, there's other reasons why I think that level is where it's at, and certainly not because we as management have done anything that's been detrimental to that. So I'm quite excited of the narrative we have at this point.
It kind of reminds me of Facebook. When Facebook did their IPO, I loved Facebook. Day one, I invested in them at around $33. And I remember they went down to $13. And I remember people panicking, selling in losses. I never sold. I waited. And then it eventually came back up to $30, went to $40, at which point I sold. And now 10 years later, when I look at Facebook, it's at $350.
Yeah.
It's up 10x since its IPO day. It's one of the richest companies in the world.
Yeah.
It's got more cash on hand than anybody else. But initially, when they first IPO'd, and people forget about this, they went down. And that was early stage investors.
Rich, there is an alignment that has to happen at regular intervals of who our shareholders are and their appetite and their interest level that match the alignment of what our plans are and our trajectory and where we're going. And again, it's not a flash in the pan. It's not a get in, get out. That's not what we're building. Now, I get that that's what other people might do. So from that perspective, as that alignment continues to occur and that we get people, and we can't choose them, but we get people who start to appreciate the value of what it is that we're building and how we're building it. I mean, think about it. We're here, and there's people who are, walking out with their profit and whatever they've done to date, and people who've been in who are probably underwater. But you look out and where I'm going and what we're trying to build to lure in and to convince the institutional investor to join our narrative in the coming months to years. You can see there's a trajectory of what it is we're trying to achieve. And so it's just a question along the way of making sure we have the right alignment, in my opinion, of shareholders who appreciate that value versus shareholders who are looking for something quite different. So I'm quite comfortable with where it is we're going. So it might not please everyone, but if we're not on the track we want to be on, then what the hell are we doing? So I'm pretty confident where we're going.
Yeah, and our community is really, really happy with UPI, and a lot of our members are holding the stock. And I just want to remind everyone that these videos are information and education purposes only. We're not sitting here telling anyone to buy the stock. We want you guys to learn about the stock. We do these interviews so you can understand what's happening behind the press release, and you can ask questions to the CGO, the Chief Growth Officer, Frank, who's with us live. That's why we do this. We don't do this to try to entice you, to tell you to do anything. We do this to educate you, hopefully inform you, and allow you to learn about an early stage company that could be the next success story, similar to the Standard Lithiums, which are up 600%, Mind Medicines, which are currently trading up 1,000%, TAT, which is currently trading up 900%, Vicinity Motor Corp, which is trading up hundreds of percent. These are all companies that
great track record. Wow.
Yeah, we had a great track record, and we've identified, I believe in the last 2 years, we've identified 16 companies that have gone up over 1,000%. I don't know anyone else that has that track record. Not only have we identified those companies, we've interviewed the CEOs, we've talked about the companies, we break down the fundamentals, and then we do these types of interviews so that we can understand the companies intrinsically. And that's what we really like to do, and that's what we take a lot of pride in. Now, Joshua has a question here. It's more of a statement, which we can just kind of talk about. UPI seems to be turning into the Walmart of HVAC. Well, that would be good. Just like how Walmart started selling groceries, etc., UPI will be a number one stop shop for all HVAC and healthy building needs. What do you think about that statement?
I appreciate that. I know the sentiment behind it. I would say there's an element of that, yes, but I would say I'm more interested in being a higher value premium in what it is we're trying to build. And more integrated play than necessarily, say, a low-cost option supermarket. So from that, I mean, I do get the perspective, and there's other companies out there who are trying to build a bigger distribution arm that's basically on a low-cost basis. It's value. There's a lot of transformation occurring in this industry, right? The relevance of PropTech and real estate operations, the relevance of low carbon and this new energy paradigm shift away from the traditional fossil fuel and the traditional regulated energy model. And there is an opportunity to take advantage of that and become the trusted advisor, bring solutions, get your value premium embedded in there, generate your stickiness with customers before it becomes a very mature market. And hopefully by the time it's very mature, we ourselves are very mature and much larger, and we can use the maturity for dividends for future shareholders. So I appreciate the sentiment. I think that's great. I probably wouldn't disagree that we could really mop up opportunities, but I'm definitely interested in building out more value premium solutions than necessarily low-cost option plays. The barrier to entry allows me to do that. And as long as I bring in the odd exclusive technology into the mix, I create a barrier to entry that doesn't cause me to have to fight for crumbs on the bottom with a low-cost option play.
Very good. And this is from Sean Mack. That's correct. But instead of buying this stuff outright, it's leased or financed and maintained all by us. Is that a correct statement?
Yes. That's certainly the intention, is to grow that model. And I can tell you in my experience, 20 years doing this, not every customer is comfortable. Not every customer has reached a level of, yes, I'm willing to outsource that and take that on. Increasingly, it's growing. Increasingly, that will become more the trend and more the I think the natural evolution of what people do with their buildings. and their homes. And we want to get our fair share of that. And you can just point to what's already happened in the market. And I keep picking on Enercare because, I remember sitting down with the CEO numerous occasions, and we were talking about, as big as they were, over 2 billion market cap at the time, they were still struggling with their own narrative. I mean, here we are. I don't think I'm struggling with my narrative, but they were struggling with their narrative to get beyond 10 times earnings for what they were developing in deploying capital in these types of rented assets and servicing them. But you just need to get the right investors, the right shareholders who appreciate that value, and then they sold for over 20 times earnings and taken private. I'm sure they'll be back public soon enough, but there's more than enough evidence to support what it is we want to do and what we're building. And the one nuance that I want everyone to appreciate is, if we just try to do what Enercare did, fine, it'd be a great model. We'd have a lot of fun doing that. But the one fundamental difference is it's not just renting assets and servicing them. I want to service the customers, and taking data and PropTech and AI and understanding how we help them daily, hourly, by minute with their choices would make us just generate the best stickiness so that we control their downstream spend. And that's the vulnerability in more old-fashioned models of owning assets and servicing them. I want to also service the customers, and that's a whole data insight play, which we keep building up with our AI solutions embedded.
I have a question from Whale Gabber. Says, when are you planning your next capital raise and how much? I mean, it's a great question. Obviously, we get all kinds of comments and suggestions from people. And then early on, we had people saying, go do raise now. I can tell you from great conversations with my CEO that we're very content in what we have today. I think a lot of our growth going forward can absolutely come from the form of, it'll be acquisitions through shares, through debt specifically attached to certain acquisitions, and ultimately vendor take back. So I think there's a lot we can do as a business to really minimize dilution and everything we do has to be accretive, really minimize impact on existing shareholders. And that's something that my CEO and I have been pretty blunt about with people around us. That's the model we want. And so I think shareholders would be happy with that. Other people might not be. That's not the model they want, but that's the model we have. And I think as certain opportunities play out and they might require more cash attached to them, that's a nice problem to have, to build that alternate asset class. But I think there's other opportunities there that wouldn't necessarily be purely dilutive. So we'll see how that plays out. This is a question from Troy Welsh, who is one of our club members, but he's also a shareholder. I know he got in at 24 cents just recently. Yeah. He really believes in the company. What do you want to achieve for UPI by the end of 2021?
Well, one, thank you very much for believing in us. We appreciate that. What do you want to achieve? I think, so I'm not going to get into from a numbers perspective, because we haven't done that publicly. Clearly, from a plan perspective, I certainly want to have enough acquisitions being nurtured, being announced, being worked on. That's obviously number one. I think as I look out, I don't want to do this organically. We need to have other acquisitions and other deals allow us to grow significantly for the following year. And that's where I think by the end of this second half of this calendar year would be some announcements to that effect, and pathways to much larger revenue streams attached to them. So whether they're tuck unders or new acquisitions and sales of particular assets under energy resources or controls, we've certainly built enough of the infrastructure to accommodate some significant growth in different verticals. But I'd love to see some acquisitions being announced, LOIs, whatever stage they're in, but something more tangible for shareholders to see. And I think that's highly feasible.
Thank you very much for answering that question. This is from Jesse Mole asking, are you going to focus a lot on expanding into the United States and continue to expand into schools and such for 2021, 2022?
So I'll take it in reverse. Schools, campuses, big plans, working with them. We have some great advisors who would be very active in that. And so we are putting together a bit of a plan and strategy to scale what we're doing for school boards and campuses today. So I definitely would see something that would be more tangible before the end of the year. And you should see good examples of that or outcomes of that. I think that's a huge opportunity for us, and ones that, because they've been closed for so long, they probably haven't increased they haven't increased their capital spend as much as they probably should have, and it's sitting there. So we'll get our share of that. The first part of the question now was, remind me.
Are you going to focus a lot on expanding into the United States?
Oh yeah, that's right, United States. I think the quick answer is there's absolutely more operationally efficient targets I'd like to go after in Canada and sort of expand that reach and capability. It's just easier to do it from a traveling oversight perspective. The challenge you have with, we're not a large company. The challenge you have with buying companies that might be our size or smaller in other parts of the United States, one thing I've learned over the years is you can go buy really good companies and with great people, but you always need to be prepared to step in a moment's notice and do things that have to get done. So I think the proximity to that, the further away would just mean the greater the opportunity to sort of offset that type of risk. So we'll be a bit more opportunistic of what we see. I guess just two trajectories. One is a bit more opportunistic of the size and then the types of business and place in the US that make sense, that can warrant that effort without the risk of not being close to them. And the second one is we are building out a pretty robust distribution program. So as that distribution program takes us into markets and grows sales in certain areas, that itself creates an opportunity to maybe scale or leverage the knowledge, the contacts, the relationship off that. So we'll see sort of what becomes the first flag, putting a flag in the US market from an operational perspective. We'll see how that plays out, but we're definitely looking to do Canada at probably a more quicker fashion, and we're being a bit more opportunistic in the US. But there's a lot of great targets. It's really, I've said this before, one, they want to have to sell. So is it at the right time for them? This market is changing. HVAC services, indoor air quality, air purification. It's not like people are going to be hurting in this type of industry. So why is someone selling, and then why are they selling to you? So the first one I can't solve. Why are they selling? Hopefully, we get our share of who's looking to sell. The second part is we've spent the last 7+ months now of building a platform that people want to sell to. There's two equations we're solving. What's a target that wants to sell? Can we convince them? But two has to be why us. And I think we put a pretty good plan and infrastructure together to convince them that we're a company worth taking shares in. And it was a good question prior to this of, do we need cash for things like this? If they believe in our story, we won't need cash for it. And that helps keep our cash close, and it helps make sure what we do is accretive quite immediately and bring in the talent who want to join us.
Question from Jeffrey Lutz, another club member who's actually in the United States. What type of corporate culture do you aim to promote, and how do you create that culture?
Aim to promote. Yeah, I mean, I think it's a tough one. I'm not too sure all the different terminologies of that, but I think a corporate culture where we're all incented to, there's no limits. Everyone's incented to be as open and as blunt and as provide value and even criticism as much as they can. So we have changed the culture of what we currently have a bit, where far more open, far more innovative. People are excited. They're invigorated as to what it is some of our plans are and how they can play in that. So it's a very open culture. It's a very open door, open culture. How do we all learn? How do we all create value? And how do we make sure people? I've always said there's 3 things we have to do well if we want to be successful. It's provide value to shareholders, provide tremendous value to customers. But if we don't care about our staff in the same vein of those other 2, then there's no longevity to this plan. So I'm a big believer in investing in people and their ideas. And that's really the culture I think that we're building. That's certainly what I'm building, and I think it's working. And the testament of that so far is there are people who are coming back, who left this company years ago, who are leaving their jobs, coming back here because they really like what we're putting together. And that's a pretty good sign.
Absolutely. One last question from Troy Welsh. One more big question. Would you do share buybacks, and would you be willing to put more skin in the game?
We haven't had those conversations, so I couldn't tell you one way or another. I think there's enough other things we can do with our money and sort of I've talked about, we're open to vendor take backs. We're open to, to buying companies and some shares, some vendor take back. But I think at the moment, we're really just looking at the growth we can create for the platform, and not necessarily, while we're undervalued, hasn't been a thought or hasn't been a strategy to say, like others have done, gee, let's go buy back more of our shares. I think there'll be more. So we're ending the end of our fiscal year at the end of August. I'll be spending most of August and then some really getting our corporate year. So I'm sure there'll be opportunities to have conversations about all this.
Okay, great. Well, those are all the questions we've got. We've been live for almost an hour, 53 minutes. Time flies when you're having fun. Thank you so much for joining us again today. The Chief Growth Officer of Universal PropTech, Frank Carnevale. Frank, do you have anything else you want to leave us with before we say goodbye?
Yeah, no, just to say, I think for all the viewers, thank you so much. Your questions are great. Really appreciate it. And I know a lot of you guys and a lot of you folks are on our Telegram channel. Thank you very much. And keep asking questions. As all of you know, I have no problem answering questions. Ask them all you want. And there's channels to do that in. Rich, it's always great being on your show. Really appreciate the time. I think if there's anything else, we're not going to slow down. We're still not going to slow down, regardless of whether programs come to an end soon or those things. It's a very aggressive agenda, really engaging a lot of people to make things happen. And I really look forward to the rest of the year, that's for sure.
Well, I think you guys are doing a great job. Thank you for joining us again today to break the news. And we'd love to invite you back anytime you have any other big news you want to break down, or if you just want to have a discussion, talk to the members, because there are a lot of members within our community that are holding the stock, that are buying the stock, that are positioning themselves on the stock consistently. So once again, thank you for your time today. Frank Carnevale, Chief Growth Officer of Universal PropTech, UPI in Canada, UPIPF in America, and 8LH in Frankfurt, Germany. If you're not winning, you're not watching. We bring the winners, and we bring them to you first. I think this company is undervalued, underappreciated, underexposed at these prices. I think the sky is the limit. And thank you for your time today. Enjoy your summer, everybody. Have a great day. Enjoy the green day. Monday was a tough day, but the market's given it all back. Like we said it would. We're in the midst of a bull market. And every time the market goes down, it's literally a buying opportunity. And I think the same thing is going to present itself with UPI at these levels. So thank you for watching. Thank you for your time. Thank you, Frank. And have a nice day, everyone.
Thanks, Rich. Bye, everyone.